Hi, welcome to another episode of Detroit Investor TV. My name is Jeremy Burgess, the Detroit market expert from Urban Detroit Wholesalers. And in this episode, I'm going to talk about property tax in the state of Michigan, and specifically in the city of Detroit. I got a lot of requests for this one because a lot of people do not understand it. First, the taxes, property taxes in Michigan are higher on average than most states, and that's just because the state of Michigan gets a greater chunk of its money from property tax than other states like California, which doesn't tax properties but taxes everything else. So you're still paying the tax, you're just not seeing it as a homeowner. Now in the city of Detroit, property taxes is even higher. And this comes down to pretty much one reason. Basically, in the last 40 years, about half the population of Detroit has moved out, either into the suburbs or into another state or somewhere else, because of declining manufacturing and all that. You know that story. So what the city of Detroit was forced to do, since it has the same amount of infrastructure, however, half its tax base left, is that they raised property taxes. Also, property taxes for investors are about 35% higher than property tax for homeowners. And this is actually a Michigan law, and it's called the Homestead exemption. For your own personal residence, for the home you live in that you're claiming as your personal residence on your taxes, you get about a 35% property tax cut. Obviously, if you're an investor, you do not get that homestead exemption. You have to pay the higher property taxes. Now, why? I get this question a lot too. Why are property taxes so different from property to property? And there's a couple answers to that. First and foremost, Michigan has a law that after you own the home, they cannot raise property taxes more than 1.5% per year. So if somebody's owned the home for, let's say, 15 years, and they raise taxes higher for new homeowners, the old homeowners, by law, couldn't get their property taxes raised more than 1.5% per year. The exception is when that homeowner sells their home. At that point in time, it would be uncapped, and they could raise, like, let's say they raised it 10% or 15% over 10 years, but they can only raise it 1.5% per year. They can uncap the whole thing when the home is sold. So when you're looking at all the properties, you go, why? Well, this house is on the same street as this one. Why is this one $3,500 and why is this one $2,800 a year? It doesn't make any sense. Same property, same street. That's one of the major contributing causes to that, is that uncapped tax when the property is sold, and that 1.5% Michigan law that they can't raise the taxes. Another reason is Wayne County and the state of Detroit mostly the state of Detroit isn't operating as efficiently as it could. And what does that mean? Well, that means that properties aren't necessarily being assessed every year. Obviously, you're aware of a lot of the problems in the state of Detroit and with the city of Detroit government, even though it's been turning around, for the last couple years and really getting better. It still has a long way to go, but you're talking about 40 years of government kind of caving in on itself before the turnaround. Not all the departments were operating as efficiently as it could. So many times one property was assessed that year, missed another property. You actually have to fill out a form to make sure your property taxes are assessed. It's pretty funny. They were actually so bad at their job, they didn't know when, because the recording's at Wayne County, but the state of Detroit actually assesses the taxes. You have to fill out a form to notify the state of Detroit that there's been a sale that's happened. They don't actually check Wayne County records. That'll probably change here in the next couple of years with the new administration and the direction that the city's going. So if you don't send this form in, they don't know, and your property taxes don't get assessed. Now, there is a fine for that. If you get caught, it's $200, but obviously that does create a system where it benefits you to perhaps not send in the form and pay the fine if you get caught, versus sending in the form and potentially getting higher taxes. So that explains why property taxes are so high, and why there's such a varying degree in property taxes in the state of Detroit. And I just caution investors not to focus too much on it. Basically, when you're buying a house in the state of Detroit, you're looking for cash flow. Focus on the cash flow. Don't get too caught up in the taxes. Now, obviously, if taxes are too high in a particular property, and in my opinion, if you're not getting a double-digit return, somewhere between 10-14%, you probably need to take a pass on the property. In my opinion, if it's below that threshold. And for me, that number is $4,000. I know it seems really high, but I know if I'm paying more than $4,000 a year in property tax, my return on my investment dropped below that 10% threshold into a single digit, maybe somewhere between 7, 8, 9%. And that to me is not a deal. It's not worth doing. So focus on the cash flow, not necessarily on the property taxes. You still got to take a look at the property taxes to make sure your cash flow numbers make sense and your return on your investment makes sense. But don't just look at it and say, well, I can buy a house, a $450,000 house in California has $2,000 a year in property taxes. In Detroit, a $40,000 house has $3,500 a year. Yeah, but you can't buy a house in California for $35,000 or $40,000, and it just doesn't even exist. You can't even buy a lot for that. So the opportunity is obviously here. So focus on the numbers while still checking taxes, and now you kind of understand why they are the way they are. Just focus on your return. That's really what matters when you're looking at buying an investment property in the state of Detroit. Focus on your return. If you have any additional questions on this, please leave it in the comments on the blog or on YouTube. And thanks for tuning in to this latest episode of Detroit Investor TV. Once again, I'm Jeremy Burgess, the Detroit market expert from Urban Detroit Wholesalers, and I look forward to seeing you on the next episode. Happy investing.